Welcome to Markets Now. I'm Michelle Rook with Darren Frye Water Street Solutions. Well, mostly lower closes on Friday with a few exceptions. Soybean oil, Chicago wheat, and I believe cotton was higher. And Darren, corn and soybeans, let's start off there because it looked like we saw some profit taking as we ran up into some chart resistance.
Yeah, we sure did. They didn't act too bad after the strong day that they put on Thursday. The report wasn't that friendly. It wasn't that negative for wheat, but we saw a big reaction, and markets overall held on to things for Friday's closes. But I think it was some technical selling, profit taking ahead of the weekend, and not getting through chart resistance that led to that.
Was there also maybe a little bit of farmer selling?
Oh, yeah, I think there was some farmers selling. Farmers have some extra bushels, especially in the east. Some of these yields are much better than they expected, especially given the type of erratic weather we had. And probably some of it was farmers selling. On a nice rally, they rewarded the market.
So then what's your thoughts now post the WASDE report? Yields came down on both corn and soybeans. Do they keep coming down? Historically, that's kind of the tendency here, isn't it?
Yeah, I think it is. I think you're right about that, Michelle. Typically, when you come down in October, you open up the door for further declines in November and into the final report in January. I certainly think the last half of the crop, both in corn and beans, could be a little bit less optimistic or less impressive than the first half. There's no question the first half has been better than expected. But I do think that we're seeing some of those yields decline a little bit more as guys get a little farther into the harvest. And of course, we just have more things like phantom loss and weather losses that can affect these crops as you get deeper into October and begin November. And so that might make the second half a little bit smaller.
Are you expecting that we are going to see some field loss here with this storm system that's moved through with these really strong winds?
Yeah, I really do. This low pressure system, and we need the rain. We need the rain further east, further south to get this Mississippi recharge. But we'll take any rain we can get. But, the soils are so dry. A lot of it's going to be soaked up, never reach the Mississippi River Basin to get into it. But this low pressure system is strong. There's winds that are associated with it that are 20 to 30 mile an hour steady winds, gusting to 40, 45, 50, even some gusts in South Dakota up into the low 60s. And boy, if you associate that with rain during that windstorm, you're going to have a lot of down corn. And that down corn is just hard to pick up. The stalks just have less integrity in them this time of year. By the time you get to the middle of October, the plant's really dead. And any of these ears that are holding moisture under 20% have a tendency to lodge worse. And so if we break it off or push it over at the crown, that's going to be hard to pick up, and I think you will have some harvest losses with that.
Yeah. So even though we had profit taking on Friday in corn and beans, we had higher weekly closes. And so what are you watching technically? What do we need to keep building on that?
Well, I want to see the market start off and move higher this week. I think by Friday's close, I'd like to see corn close about 507.5. Chicago December wheat about 596 3/4, and the beans above 1317 for the November contract. The funds are still big shorts in the wheat and the corn. Obviously, they've liquidated most of their long position in beans. Maybe they regain some of that length, but I would like to see us get pushed above those levels, close the week strong, and then we could say, hey, we probably marked the bottom here for fall lows.
Yeah. So we did score a reversal yesterday, at least in Kansas City wheat, on what was some pretty poor news from the WASDE report. So how encouraged are you about that? Or is that another head fake like we've had before?
Well, the two classes of wheat that do concern me is Minneapolis and, of course, the Kansas City, and that's where a lot of these yield increases were found when we came out in that September inventory and small grains report. And so those are a little bit concerning. If we see soft red winter wheat move higher, it's probably short covering from the funds. It rarely leads the complex higher, being the class of wheat it is. But we got to see Kansas City, Minneapolis perform. And so far, they're lagging here, given their yields were larger. And that was probably the surprise on September 29th.
Certainly. And the Chicago wheat is starting to lead the gains here. It did have a higher weekly close. And some of that's been this push from some of this SRW business to China. Is that going to continue?
I think it is. China took a lot of our sorghum, and they've started now into the wheat. We need to see them show up for corn and soybeans, but I think they continue to take wheat. Everybody says they got a really big crop. Reuters had a story out talking about how their crop is larger than last year on corn, larger on beans. and about 11 million metric tons more than what the USDA has them written down for on the corn side. But rarely does China tell you what their crop size is, and they're kind of bragging about how big it was. Remember, they had droughts, they had hot weather, they had floods. It's hard to believe they got a record crop, but yet they have a healthy appetite for taking corn out of South America and now some of our products. So time will tell, but I think they need more grain than what they're letting on.
Yeah. Cotton market, we did end higher there on Friday, and I believe we had a higher weekly close. So I was surprised we didn't get any good buying interest after the WASDE report. That looked like it was pretty bullish overall. So where's this market going?
I like the upside of cotton technically, and I do think domestically we have a story. I think the cotton crop obviously is much smaller than what we thought 2, 3 months ago. Not a lot of surprises on the WASDE for domestic, but it was the world numbers that came down. Came down 10 million bales, and market really didn't respond to that. And so I guess they probably didn't believe it. I think cotton on Friday was up basically because crude oil was up, and a lot of times it follows crude because as crude goes up, it makes cotton more competitive with polyester. And so I think that was probably what it responded to. But I do like the upside of cotton. But if we're going to get the bull train going, we need to keep it going. So I'd like to see this market up good this week, closing above, let's say 91, 92. That would be a good area to see close by Friday.
Crude oil was reacting to the Middle East situation, the Russian sanctions, what?
No, I think it's all of it. I think there's just so much uncertainty in these markets. We've had our own challenges here at home with the moratorium on drilling and how we've handled the strategic petroleum reserves. But then you had this war breakout not even a week ago, or I guess a week ago. And the bottom line is nobody knows what's going to happen. Is this going to escalate or is it going to stay confined to where it is? And this is really going to have an impact on energy prices. And so we could really see energy have implications across our fertilizer markets, across our own grain markets. There's a lot of things that are far-reaching that it could impact. And so we have to watch this very closely. But I think that is why people are nervous to be short crude, especially ahead of any weekend.
Yeah. Are there any other markets that we need to watch in the ag sector? I know you mentioned gold and, crude oil being sensitive to the Middle East conflict, but any other ag areas that you're watching there?
Well, I think you gotta really take a look at what happens with bean meal. I know Argentina's out of the market here until they get to March or April, and bean meal really led the rally on beans on the report on Thursday after the WASDE came out. But in addition to that, crude oil going up, yes, that's good for all our markets. But if you're going to have a broad market rally in commodities, you need silver to lead, and gold is more of a confidence thing in the economy and concern over what is happening. But if silver starts to lead, that could lead to a broader rally across all markets. If you look at the soft markets, sugar, cocoa, coffee, orange juice, all these markets have been screaming higher. Coffee trying to turn higher. It hasn't been one of them, but cocoa and sugar and OJ have been on fire. And so you have to look at this and say, hey, the CRB is still down, but with some of these markets turning for higher, it could flip that CRB up. Haven't seen it yet, but we certainly are watching for that.
And the cattle market was lower here today, despite some pretty good cash news, $1 to $3 higher, depending on where you're looking. But, is that just some general profit taking, you think, again?
I think so. I've been bull spread the October over the Dees. We liquidated that with a small profit here yesterday. But then, I'm kind of bullish the December cattle. I think from now until Thanksgiving, it's going to be hard to be short the December cattle. I think the feed yard could have the upper hand on the packer. The packer is very short to the knife here, very close to the knife, and they need to buy. And so I think that bodes well for the producer. And so I like cattle up into that 195 area of December. So pullbacks are for buy-in right now, in my opinion, in both feeders and in fats.
Thanks for joining us, Darren Frye, Water Street Solutions. That is Markets Now.